Yeah, what's up, everybody? Good morning. Welcome to the morning show. It's the best morning show in finance here on Stock Market TV. Spencer Israel. Special show today. I've got JC Parets and a guest host, surprise guest host. We did not tell you about this yesterday. We did not warn you, but be warned. Option Sean McLaughlin is here in the house. He's our guest host today. We had a lot to discuss. Bitcoin, crypto, parabolic mode. That's what's happening here, right up and to the right. We got FedEx. I want to talk about Winnebago. Tesla's on my mind. We'll talk unusual options flow. As far as guests, we have Kimmy Sokoloff and Willie Delwich, founder of High Mountain Research. Will be on at about 9 o'clock. So you know what to do. Strap in, buckle the seatbelts, smash that thumbs up. It's the morning show. Yo!
All right. Shawnee baby in the house.
What's
Sean got the hot hand
boys?
these days. Sean with the hot hand. Mara on the move.
What's happening, boys? About 30 minutes ago, I was enjoying a nice cup of coffee, sitting outside. Nice morning here in Colorado. And then I get a distress signal from JC. Can you help out in the morning show? Well, so here I am. What's up, boys?
Welcome, Shawnee baby. We are happy to have you here. I think I don't know where else to start other than the fact that these cryptocurrencies are absolutely ripping. Bitcoin on fire. What day did we put on the Mara trade? That was like 3 weeks ago. MARA.
Yep, that sounds right. Let me look at my my trusty little spreadsheet over here, off screen. Get you a date.
May 31st.
We got in on May 31st.
I mean, listen, the timing was impeccable, and I want to get back to this. Can you throw up the chart quick there, Fonz? You know, the Mara specifically on its own, because when I'm looking at this chart, so we were in our meeting. You know, we're figuring out, sort of what to do with this thing, and for me, I wanted to buy the straddle. I figured this tight little range that we've seen in Mara, we're going to have an explosive move in one direction or another. So, and I didn't quite know what direction it was in. I mean, you never know, but I figured it was going to be explosive in one direction or another. And I wanted to buy the straddle. So in other words, we're long the calls and the puts, essentially betting on just an aggressive move in either direction, and I'd be good either way. And then Sean, I want to hear your thoughts as to why, sort of a post-mortem, why were you so adamant about, don't worry about the puts, JC, this is buy the calls? Can you talk to me about why we did that? And by the way, for the record, I'm glad I listened to you, but I forget the reasoning, and I'm curious, and I think it would be a good value add for the audience.
Yeah, you were not wrong in looking at the implied volatility and the options and seeing that they were cheap. And generally speaking, that is a good environment to buy a long straddle or a long strangle. So a long straddle, for those who don't know, that's when you buy a call and a put at the same strike. Okay, so let's see, Mara's trading around $10. So if you bought the 10 call and the 10 put, as long as it moves big direction in either way, you potentially can make money. That's a straddle. A strangle is when you buy an out of the money call and an out of the money put. So with Mara trading at 10, we could have potentially bought the 12 call and the 8 put, right? So they're a little further out of the money. It's cheaper, but if you get a big move, you actually get a better return on your money. So it's a trade-off. But anyway, you were not wrong in thinking that that was a good environment to buy a straddle or a strangle. Where I told you, or where I was thinking that I didn't like that, I would rather just buy the calls, is because look at the price of the stock. At the time, it was like a $9 and change stock. And I was like, if this thing goes down, how far is it going to go from here? It doesn't really have that much room. Even if it goes down to $3, which in percentage terms would have been a good, big move, I didn't feel like that option play was really going to pay us for that kind of move. So it just seemed like we were throwing money away buying those puts. Not that they couldn't work, but we had a much better chance of making a big win from the call side of that trade. So let's just buy the calls. Let's forget about the puts. And hey, knock on wood, so far, that's turning out to be the right move.
Yeah, and this is, this is essentially one of the ways to take advantage of higher Bitcoin prices in the equities market. And some people are like, well, why, JC, why don't you just buy the Bitcoin? Well, some people, a lot of investors for that matter, have accounts where you can't buy Bitcoin. My understanding is I'll be able to buy Bitcoin in Fidelity, Merch, Schwab soon, and that's great too. But until now, we haven't been able to do that. So let's say you have a retirement account or you have a stock brokerage account and money in the stock market that you're trying to have that exposure into cryptocurrencies for whatever it is. There's a variety of reasons why it's not as simple as just buy Bitcoin, right? A lot of hedge funds, a lot of financial advisors cannot get exposure to Bitcoin through, decentralized exchanges, and are looking to get exposure in other areas. In the options market, are we messing around with the options market in crypto? Not exactly. We're not quite there yet. So if you want options exposure, you want leveraged exposure to the cryptocurrency market, you got names like Mara. Throw up the Riot overlays just so you can see that they really trade together. Mara and Riot. These are about $1 billion and change market capitalization. These are Bitcoin mining companies, if you will, a very high correlation. And then throw up the chart of technology overlaid with Bitcoin. And this was part of the reason that we've been moving so aggressively. In hindsight, not aggressive enough. I should have bought the Riot with Straza. I figured, owning Bitcoin, owning the Mara was enough. But when you're right, it's never enough. When you're wrong, you own too much, right? Always. And then, so this is part of the reason, Sean, right? Technology stocks have absolutely ripped. AI, blah, 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 bull market, all this stuff. Great. But Bitcoin hasn't followed along. Neither have bonds for that matter. So Bitcoin has been really trading more with bonds than technology. But the bet was, forget bonds, the bet was, is technology going to drop down and catch down to Bitcoin? Is Bitcoin going to catch up to technology stocks? Or the correlation is now changing? I find it hard to believe that the correlations are now changing. I don't necessarily want to be betting on technology stocks crashing and coming down. It seemed to me like the most logical outcome would be to Bitcoin to be catching up. And that's what we're seeing. And Mara obviously is benefiting from that. Riot, MicroStrategies, there's a variety of different vehicles out there that can give you exposure to cryptocurrencies. And this isn't even Crypto Fridays. This is just what's moving today.
Well, JC, one thing I'll add about some of these crypto plays is that because of the bear market that we've had in the crypto space over the last, 18 months now, the stocks that have crypto exposure, they have been a target of short sellers. And so a lot of these names have a high short interest. And shout out to my friend Michael Noss, a friend of the show. He just hit me back channel and just told me that Mara's short flow right now is 25% of the shares outstanding. So that's juice, man. And we're finding that in stocks like Mara and Riot and others that if the market starts rising in these stocks, there's going to be a lot of fuel underneath, a lot of shorts we're going to be scrambling to cover, and that's just going to be a nice tailwind for us.
So a couple of things. So I check myself. Mara is now up to $2 billion in market capitalization. So is Riot. So it used to be $1 billion, now they're $2 billion. All right, so that just going to clarify that. Tomato, but mistake fixed.
I thought we were talking about market caps in trillions now. Who cares about $1 billion?
Right, $1 billion here, $1 billion there. What's the difference? Didn't the Pentagon just lose $6 billion or something like that? What's a few billion? So the point I wanted to make in terms of short interest is that just because a company has high short interest doesn't mean that we want to buy it. It doesn't mean that it's going to go up. In fact, Silvergate had an 80% float was short, and that's a zero. So just because it's a super high short interest doesn't mean that the stock's going to go up. Doesn't mean we want to buy it. What it does mean, to me anyway, you guys can do what you want. To me and some of the others, we look at it as a catalyst where if the stock does start to go, there's a huge tailwind behind it to really get it going. Because what happens is it starts to rally. So now the shorts are wrong, so they have to cover. So they start to cover, and the short sellers are just promising to be future buyers. Shareholders are just promising to be future sellers, for the record. So short sellers have to buy it back. So what happens is stock starts moving higher, starts going against their shorts, then they start to cover. So they have to buy it back, which adds more buying pressure, which brings in the momentum players. That's us. We see this happening. So we get involved too, which causes more short sellers to have to cover, which causes more momentum players to come in, which causes the margin clerks to just come in and unwind the short positions in some cases. It's not willingly covering. The margin clerks are doing it for you, and they're not using limit orders. They're just throwing it out there. Right. And that creates, motion creates emotion or whatever, and that creates the squeeze. And that's what we refer to as a short squeeze. And the fact that these companies, not just this one, but others throughout the year, have had such high short interest. These companies have doubled and tripled this year in a lot of cases. And it's not because we've seen this massive fundamental shift as it is the mechanics of a lot of these buy-side firms came in with hardcore short positions and have had to unwind, and that buying pressure has caused huge squeezes. It's not like the fundamentals have changed so much in the last 6 months. It's the mechanics of the market, and we've seen that in a lot of names. We're highlighting a ton of these names, Carvana, some of these crypto names, huge short interest. A lot of these growth stocks that got crushed last year and the year before, for that matter, instead of covering their shorts, these short sellers, after such dramatic declines in these stocks, instead of covering their shorts, these idiots added to their short positions. Sean, can you believe that?
Let me add one quick thing to that. Everything you said is right. I will take issue with the word idiots, and here's why. I want to warn people that just because a stock has a high short float doesn't mean you should go and buy that thing. If there is, we can argue till the lights go out whether or not there is actually smart money in the market. But if there's any smart money anywhere in the market, I would argue it's amongst the short sellers. Those people have to do a lot of work to take aggressive short positions. They can be wrong, just like you and me, just like everybody else. But are they the dumb money? No, they know what they're doing. They have a reason to be short. So just because there's a high short interest doesn't mean, oh, that's an automatic buy. They might know something.
Well, that was my point earlier. Just because the short interest is high doesn't mean it's an automatic buy. All it is a tailwind if it does get going.
Yeah, I was about to say what Sam said in the chat. It has a high short float for a reason, right? Stocks that are heavily shorted are heavily shorted, not
because of its high quality.
Right. It's
not because of Reddit.
Fine. Idiot might be a little harsh. It's not so much idiots. It's just that after such dramatic declines in these stocks over almost a 2-year period, they didn't cover their shorts. They actually came into the year with the highest short positions ever. Now, granted, were there short sellers that did cover? Yeah, we were short Tesla in the fourth quarter. So yes, there were short sellers that covered, but that doesn't matter. What actually matters is in aggregate, they were more short than ever coming into the year, and we've seen the consequences of that. And I mean, we're having a great year. I mean, I'm thrilled about it. The Nasdaq's off to its best start to a year ever. Hello, can we go to state of the markets?
Yeah, we can. Real fast, Jerry Edwards brought up BTBT. That's a smaller miner. There's like a half dozen of these miners out there that are, if you care about such things, or Mara Riot, BTBT, Hive, Hut.
Be careful with some of these. This BTV is $300 million. I mean,
you're
not even $1 billion in market cap. I can't take you seriously.
Yeah, I mean, I just bring it up to mention that it's going parabolic, and we have the chart. Something I'd be curious to know is, I would love to see some data on Bitcoin 52-week highs and how that corresponds to the S&P or pick your index, S&P 500, whatever, rolling over, because it does seem like the Bitcoin hype machine tends to happen. This is just anecdotal in the later periods of the mania, is what it seems like to me. Maybe I'm wrong.
You're definitely wrong.
You
and you got a sample size of 2.
Yeah. First of all, the sample size is a joke, but no, you're absolutely wrong.
It just seems like to me that the Bitcoin, and it can last a while, right? Obviously we know this, but like, the Bitcoin hype machine is a different kind of machine to me. When that thing starts going, it's gone $5,000 in the last week, right?
Spencer, I love you. But Bitcoin started rallying in March of 2020 as soon as the stock market started to rally, and had a monster move as soon as the stock market started to rally. And you know when Bitcoin peaked? Bitcoin peaked right after the stock market peaked in early 2021. I mean, and when did Bitcoin peak?
Yeah. No. That's what I'm saying.
Bitcoin peaked the prior time. Bitcoin peaked the prior time at the end of 2017, early 2018, when the stock market peaked.
No, that's what I'm saying, right? Bitcoin peaks when the market peaks. That was my point.
Right, but you're saying that the hype in Bitcoin comes at the end No, it's not. It's a coincidence. The hype in Bitcoin came when the stock market hype came in March of 2020. The peak
March
of
of
Bitcoin
2020
is
was a separate. I mean, that's sort of a separate beast there. That whole period.
And Bitcoin broke out to new all-time highs in 2020, and when the stock market was really getting going as well. It's not a leader or a laggard. It's coincidence.
Okay.
If anything, Spencer, to your point, it's been a laggard this cycle. It's been a laggard now,
well,
now it's playing catch up.
Catching up, right. Yeah, and obviously it moves with the higher beta, so it's gonna put everything else to shame. You know, I wake up now every morning and I'm looking at what's most active, what are the most traded stocks. You know, it's 7 a.m. and it's Mara and Riot, right? And
I love how that's what Spencer does at 7 a.m. He looks to see what's the most. I like that.
That's a sentiment check for me. What stocks are most active in the pre-market session? And yeah, it's coin this morning. You want to know it's Tesla, Neo, Marathon, Riot, Rivian, Coinbase.
What kind of market do you think we're in if that's what's happening, right, Spencer?
That's
to your point.
Yeah, that's my point. All right.
I got one more comment. Before we go to state of the markets, and that is that anecdotally, I'm seeing, you know, the laser eye type people, you know, the Bitcoin maxis and the crypto crazies.
Oh, they're back.
The hardcore. No, the opposite.
Oh,
they have been. I've noticed that they are diversifying away from cryptocurrencies, and they're now experts in technology. They're experts in AI. They're experts in solar and clean energy, and they're diversifying their narrative so that they're not pigeonholing themselves in their careers to cryptocurrencies. These are the people that have been pounding the table about cryptocurrencies for, you know, almost a decade at this point, from what I've seen, even half a decade. And they've been, so you're seeing even the biggest believers diversifying away from that. So the fact that things are getting going now, as soon as some of that capitulation has taken place, I think is just classic. All right, hit the bumper.
All right. Yeah, let's do that because we got Willie coming on in 10 minutes. So state of the markets.
Willie.
Let's roll. Willie.
All right, guys. So last night was our mid-month conference call for All-Star Charts. I have Sean like calling me 10 minutes before I go live. I'm like, Sean, you understand that the conference call is like in 10 minutes, right? It was obvious you had no idea. You had no idea that the conference call was in. You had no plans on even being in the conference call.
I was calling you for dinner suggestions. I wanted to know what we were eating for dinner.
Yeah. So I'm like, Sean, I gotta go, bro. So anyway, so that was last night. For those people who were there. Sean was busy at happy hour with our friend Ian Rosen. Shout out Ian Rosen. And you were at happy hour doing your thing. Your trader meetup, by the way. So for those of you in Colorado, either in Boulder or in Denver, reach out to Sean. He hosts the trader meetups, has for a long time. Really cool. I've been myself. But why don't we get going? Fonz, throw up chart 2 showing the presidential cycle, 4-year cycle. This is the pre-election years. This historically is by far and away the most bullish time for equities, and stocks are doing great. Nasdaq's off to its best start ever, and in a year where stocks are supposed to do well. So I don't know why anybody should be surprised that stocks are doing exactly what they're supposed to do, right? Going up, and then show the list of new 52-week highs, making new 52-week highs. The most amount of new 52-week highs, Sean, that we've seen in over a year. Right, so just the type of market behavior that we tend to see in bull markets is breadth expanding. You're seeing sector rotation, right?
I wish I had this chart with me last night. At our trader meetup that you referenced, we had one of those guys, JC, who showed up and said, "There's 7 stocks moving this stock market higher." I was like, no, bro, you're wrong. There's a lot of stocks making new 52-week highs driving this thing. I wish I had this chart at that time.
Well, Sean, if you ever need a chart, we've got quite the team that can supply these charts for you. Myself and Straza and the Fonz and Grant, we got quite the crew. So if you ever need a last-minute chart, you can always count on us, my friend. But, this I think it's important before Willie comes on. Looking forward to chatting to Willie about market breadth and sector rotation and sort of some asset allocation stuff that he does really well. we've known Willie for a long time, does great work. Before we get into that, I think it's important to kind of take a step back here and just understand the type of market environment that we're in. Sean, humans have a really hard time with this. One of the things that I really like about you, Sean, is that you come to the market from a trader's perspective, open-minded. You don't care if we're long or short. You don't care about credit spreads or interest rates. You know, you roll your eyes when we start getting into all that stuff. And, you know, once we start throwing out the ideas on how we're going to execute, now you're excited, right? That's what gets you going. And I really love your open-mindedness. But, you know, for market participants that don't get to hang out with us all day like you do, Sean, you know, I think it's important to take a step back and just think about the market. What are the types of things you see in bear markets? What are the types of things you see in bull markets? What happens in bear markets? The majority of stocks are going down in price. You're getting more and more stocks making new lows. You have a key sector really driving things lower, or a group of stocks driving things lower. The leaders are catching down to the laggards. Those are the types of things that happen in bear markets. More and more countries around the world making new lows, breaking down, breaking support. Let me ask you something. Are any of those things happening? Have any of those things been happening over the last year, Sean?
Not at all. The green line goes up, as they say.
Now, what happens in bull markets? What happens in bull markets?
Well, we're going to see a lot of new 52-week highs. We're not going to see 52-week lows, or a very small amount. And we're going to see lots of sectors participating.
How about even simpler than that? The majority of stocks are going up in bull markets. How about that?
Just start counting. I've been listening. I've been listening. Just start counting.
I don't understand what the problem is with counting. Just count. Countries making new highs, sectors making new highs, a lack of new lows, consolidations breaking out versus breaking down. Is that what's been happening over the last year? Yes. Sector rotation, new leadership, the laggards catching up to the leaders versus the leaders catching down to the laggards, which we see in bear markets. So don't worry about the name so much. The reason we like to call them things is just to simplify it, to be able to decide, okay, should we be spending more of our time looking for stocks to buy, or should we be spending more of our time looking for stocks to sell? And when you weigh all of the evidence, it's been quite obvious to us that we should be allocating the majority of our time looking for stocks to buy, right? Because historically in bull markets, I encourage you to go study past bull markets. Investors are rewarded handsomely for owning stocks, not for shorting them, right? That's what happens in bull markets. So I think it's just important for investors to just take a step back and ask yourself, over the last year, call it whatever you want, bull market, bear market, recession, bear market rally, stage 3, quad 6, whatever you want to call it, right? Have the majority of stocks been going up over the last year or not? The answer is yes. The majority of stocks have been going up over the last year. Call it whatever you want. The majority of stocks have been going up over the last year, period. So the question is the trend going to continue? And stocks are going to continue to go up in price because, let's remember, stock prices are not random. Asset prices trend. We know that. We have the data. Everybody does. It's just common sense at this point, even though humans like to forget that. Asset prices trend. So if we know for a fact that over the last year, regardless of what you want to call the market environment, stocks have been going up, the question is, do they continue to go up, or do they all of a sudden, magically, completely out of nowhere, today, stop doing that and start to go down? Is that the bet that you're going to make, that all of a sudden, completely out of nowhere, everything's immediately going to change and stocks are about to start to fall apart with no evidence or signs at all of that happening, versus the much higher probability outcome of those asset prices continuing to trend in the direction that they've been trending in?
I've never understood
my logic here.
No, I love it. And I've never understood the impulse that some traders have, where when they see something, whether it's an index or a stock or a futures contract, when it makes a new high, their instant impulse is, I got to sell this thing. It's going to roll over. I mean, stocks, the people that think this way, they think like crash mentality. They think everything's going to crash. Everything's bad. And fine. maybe the stock market someday is going to have a significant sell-off. Maybe it's going to crash. But you know what? It's not going to crash from the top. It never starts at that top tick. It's going to come down. It's going to take its time. It's going to consolidate. There's going to be a slow downtrend. And then maybe it accelerates down. And that's
You
when
tend
things
to
get
see
scary.
breath. You tend to see breath deterioration.
Right. There's so many clues.
Stocks making
So
go
many
up,
clues.
right?
Yeah.
So I mean, that's how I look at things. And, I kind of just wanted to speak from the heart here for a couple of minutes and just really simplify things, because we complicate things. Oh, percentage of stocks above their 200-day.
I have a question.
21-day highs, 63-day highs, right? But like, it's simple. Are more of them going up or not?
I have a question. What would you say to someone who says, I can't buy here, gone up so much, I'll just wait. I'll wait for it to come down and then I'll buy?
Well, to quote the homie Walter Deemer, which you should totally get on the show, by the way. When it's time to buy, you won't want to, right? When you get the pullback and it's time to buy, you're not going to want to, right? I think that's a great quote from Walter Deemer. Shout out Walter Deemer. And also, I think it's important to define two things. Number one, what is the market, right? Like, what is the market? Because you could look at small caps and say, are they due for a correction? They just got going, right? You look at financials, are they due for a correction? They just got going. Also, I think it's important to define what you mean by time horizon, because, overextended, you look at these European equities, they've done nothing for 25 years. They're just getting going. So you want to talk about due for a pullback? How about 2 decades of a pullback in Europe, right? These things are just getting going. Japan is making new 33-year highs. Japan's just getting going. So I think it's two things. Number one, identify your time horizon. Right? What do you mean by a pullback, and what time in what time frame? And number two, what is the market? Look at industrials. You think industrials are due for a pullback? They're still pulling back, right? So I think there's areas of the market that perhaps are a little bit extended, and maybe don't buy those, right? Like, I'm not buying Apple and Microsoft here against those former highs. Throw up that chart, Fonz. You got that chart, Andy? Throw up the chart of Apple and Microsoft. We talked about it yesterday. I'm not buying these right here, right? I'm not shorting them. I thought about shorting them, but I'm just not seeing any evidence at all that these are good shorts, other than the fact that they're running into those former resistance levels, which to some, that might be good enough and be like, okay, short it against those highs. I don't hate that trade. It's a high, a favorable risk versus reward ratio, most definitely to the short side. But are the probabilities on your side? Not really. So I'm kind of just hands off watching to see what happens here, right?
I'm long Apple here. And since we got here, I'm just going to throw it up for a couple of reasons why I'm long Apple here. Well, 3 reasons. I actually like that chart pattern. I think if we break through that, that's going to be a solid base to push us higher, number one. Number two, it's hard to see on this chart, but the $200 roll is coming into play. Apple's just below 200, and we know what happens at big round numbers when the stock gets there for the first time. It likes to go to and through it. So 200 is imminent, and Apple's just a few bucks away from the $3 trillion market cap. I'm sorry, but the whole world is talking about it. It's a self-fulfilling prophecy. It's going to happen. Call me crazy, but I'm bullish. I'm bullish Apple here.
Well, you're a better man than me. I got to see it. It's made a huge move running into these levels. I need to see it. I'm kind of like in sit back and hold mode. But when you look around at his brothers and sisters, at the other stocks, what are they doing as they're running into these former highs? Look at Palo Alto breaking through that like it's not even there. Look at NVIDIA breaking through that like it's not even there. So you're seeing other stocks not respecting, or I should say perhaps disrespecting, those former resistance levels like they're not even there, like a peon, and just move right on. So yeah, I'm not shorting it. So I'm not against you, Sean.
Good point, Sean, about the round numbers. The round numbers can be magnets. Before we bring on our guest, we have a question from the chat, also from tomorrow's guest, Anne-Marie Band. She wants to know, JC, what's in the box behind you?
I love it. We got to make a contest out of this.
I am not uncertain that they are Cuban cigars. I'm not uncertain. I don't know.
Okay.
I don't know. I don't want to break any laws here or anything. I don't know for sure. But perhaps they could be some.
We should have made it like a fun little contest, like a little surprise in there. Have people vote on it. Come on.
Yeah, channel guide trader, we don't put wine in the humidor. All right. Rule number one of sommelier school: you don't put the wine in the humidor. You put the cigars in the humidor. Although I'm building my wine cellar as we speak, and I will have my humidor in the wine cellar. So,
Hey, by the way, shout out to Anne Marie. I love Anne Marie. Great to hear that she's going to be on the show later this week. Can't wait to see you, Anne Marie.
Awesome. Yeah, we love Anne Marie Band. All right, let's bring on today's guest, though. Willie Delwich, founder of High Mount Research. He's here. He's ready. He sent over some charts, too. We have those prepared. So let's get Willie on the show right now.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Willie boy.
Hey guys, how's it going? Happy Solstice Day.
Yes.
Is that today?
It is.
So today's
Longest day of the year in the Northern Hemisphere.
In the Northern Hemisphere, it's the longest day of the year.
Yeah. Yep.
And not the Southern Hemisphere?
It's the shortest day of the year in the Southern Hemisphere, yeah. So
JC, you benefited from this because, as we said at the top of the show, I'm a last minute add to the show today, and I time my wake up to the sunrise. I don't know if you guys know this, but I wake up at sunrise. That's how I manage my life. And so today is the earliest I'm waking up all year. So I was up early today, JC, and that was good news for you when you needed me to fill in for the show.
Willie got a new camera. Willie looking good, buddy.
no, it's the same one I've had. So
Is it?
New angle. It's a new angle.
It's a new
it is
angle.
it is a new angle, yes. You
Looking
guys are very
sharp,
astute.
looking sharp. Too much headspace, right? Right, Spencer? Too much headspace there for Willie? Willie, let's just get right into it. So, there's been a big debate over market breadth, over the last year. The new 52-week lows list peaked over a year ago, right? And we've seen, I wouldn't necessarily go as far as saying we've seen consistent improvement since then. We've seen improvement since then, no doubt. But the consistency has really been in the lack of further deterioration after that moment in time, right? That I can definitely say. And then consistent improvement. And then how can we have a conversation about market breadth without also talking about sector rotation, right? To me, I feel like they need to be part of that same conversation. All right, so I'm throwing that out there. So talk to me. How are you seeing things? Poke some holes. Talk to me.
Yeah, so I mean, we can look at the number of new highs and the number of new lows. I like to look at the difference between the two, not in absolutes. I know you like to what's the peak new high list, what's the peak new low list, and anchor off of that. For me, the better signal is just the spread between new highs and new lows. And what we've seen over the last
and you're talking
couple
specifically
weeks,
52 weeks.
Yes, 52 week, and we're looking at NYSE and NASDAQ. You can come up with all sorts of different universes if you want. You guys were talking about what is the market. We all have our own definitions of that. For me, the universe of new highs and new lows, I look at NYSE plus NASDAQ. When it switches from more new lows to new highs, that's when you tend to accumulate a lot of strength, a lot of gains in the market. And that's what we've started to see now over the past couple of weeks. Saw it a little bit in January. That's the chart you're showing there. We had 33 days in a row of more new highs and new lows in January and February. That kind of stopped, but now over the past couple of weeks, it's coming back on again. So that's bull market behavior.
Bull market behavior. What, are we allowed to say such things in this economy? In this economy, Willie?
Yeah, take the narrative.
Biden administration.
Yeah. Take the narrative out of it. Let's just, look at the numbers, and it doesn't speak to how long it needs to last or whether it's going to look like other bull markets, but that's the behavior we have right now. And I think that's the important takeaway is as long as that, more new highs and new lows persist, let's lean into that strength. Stop the arguing, stop worrying about, index attribution of returns and whether, is it 5 stocks, 7 stocks, how many ever stocks, and just recognize that when you have more new highs than new lows accumulating, that's when you tend to see sustained strength in the S&P 500.
And talk to me about how you think about the timing, right? Because you're talking about 52 weeks. specifically, which is 1 year. And for a long time, it was, and it's all about time horizons, right? You don't have the time horizon of a day trader, right? You're looking at it from an asset allocation portfolio standpoint. So just for the listeners to understand, we're approaching things differently. But aren't you, by definition, if you're focused on 52 weeks, I know you look at a lot of things, but in this particular conversation, you're focused on 52 weeks. Let's just call it last August, last September, last October. If you're looking at 52 weeks, stocks are way closer to new lows than they are to new highs, to 52-week highs, because they're nowhere near their 52-week highs because we're coming off a bear market, but they're much closer to new 52-week lows. So isn't it somewhat disingenuous? Isn't it unfair to sort of aggregate the new highs minus new lows if all these stocks are so much closer to new lows than new highs if you're using just 2 weeks?
Yeah, that's a good question. If you look at the behavior of the new high list and the behavior of the new low list, again, 52-week highs, 52-week new lows, typically what you see coming off of important lows isn't an immediate expansion in new highs. Like you said, you're too far away from that. What you do see is this collapse in the new low list. That's the driver of the spread typically. You have a few stocks making new highs, but more importantly, almost no stocks making new lows. That wasn't really the case coming off of the October lows. We continued to see, a stubborn, relatively small, but still stubborn amount of new lows that were just kept being made. And it wasn't enough to surpass the new high list up until, the past couple weeks.
Well, now that it's been a year since the new lows list peaked, it's a lot easier for stocks to make new 52-week highs, right? So there's that element of timing as well. Talk to me about sector rotation. I'm having a harder and harder time having a conversation about market breadth without talking about sector rotation. Because that's part of it, no?
Oh, it certainly is. It's sector rotation. It's also, you were talking before, I think about, global rotation about, are we talking about the US? Are we talking about the entire world from a sector perspective? And this is where we get into this is a relatively unique environment in terms of the size of some of these mega caps. And so you can have strength out of technology, but that's only 2 stocks, or you can have rotation into industrials. That's a little bit more equal weighted. You do, over the course of a cycle, you see, in a healthy bull market, new leaders step up. We haven't really seen that yet. I don't think. We still have tech leading the way. You have discretionary leading the way, communication services leading the way. Industrials is trying to kind of take over that mantle of leadership. And that'll be the interesting thing over the next couple weeks, next couple months, I think, is to see whether or not we can have some resiliency at the index level if those mega caps cool down and you start to build some of that rotation that you're talking about, JC.
Well, if Caterpillar and Honeywell are any indication of the industrials starting to participate, I like our chances.
They tend to be.
Yeah, industrials have been resilient at this point. They haven't really taken that overall leadership role, but they've been resilient, and that's encouraging.
And you wouldn't say semis are a leader this cycle?
Well, I mean, that's part of the tech sector.
I think they've already led.
What about homies? Consumer discretionary.
Yeah, I mean,
casinos. These freaking cruise lines doubled this year. People are telling me, stocks are going up. Like, are these cruise lines in AI now? Like, what?
I saw you mention the cruise lines yesterday, and you zoom out, and I forget which one of them. I mean, it's gone from a 90% drawdown to an 80% drawdown, so it's doubled. That's the way the math works, but it's still in an 80% drawdown. So I don't really see the cruise lines as being key drivers for the market, but it is interesting to see them move off of those lows.
I'm still bearish on cruises.
Are the cruise lines doubling in 5 months evidence of risk aversion or risk appetite for equities?
So I'll change the question a little bit. In a healthy bull market, you have optimism building over time that gets elevated but is not excessive. unhealthy behavior is excessive optimism and speculation. You could argue cruise lines doubling that quickly might be more evidence of that, unhealthy speculation than a healthy build in optimism over time.
Yeah, but Willie, it's not just the cruise lines that have done so well. A lot of these tech stocks and growth stocks that got murdered throughout 2021 and 2022 have had monster starts to the year. So it's the most beat up stuff, the ones with the highest short interest. Cruise lines are just part of that. But a lot of these little growth names have absolutely crushed it this year. So it's a bigger theme than just, speculation, sure. Right? It seems like overextendedness in terms of pessimism that's been unwinding.
Well, right. That's how you get healthy and sustained strength, is those beat up areas start to improve. The most beaten up stuff tends to move the fastest, the earliest, the most dramatically. The question then is can it sustain, can it build so that it's not just, kind of these bounces off of lows, but you actually start to see sustained strength. And this is all in the context of the US market. I think much more fascinating is what we're seeing globally in terms of leadership that's different than what we saw last year, different than what we've seen over the past decade or so. Talking about Japan starting to improve, Latin America starting to improve, Mexico and Brazil.
Highs in Latin America, right?
Yeah, like that's and so as we've seen some of this, we've seen some reversion this year. Tech leading feels like 5-10 years ago, but to see Mexico stay strong relative to the US this year, that's a continuation of a theme that we saw emerge over the past couple years, not a reversion to kind of the previous cycle, the previous behavior. And so that's what's really interesting to me, is kind of this new environment that investors have to grapple with in terms of new global leadership.
Another great example, throw up a chart of bonds or rates, their funds. A great classic example of something that you always say, Willie, is it's not so much the direction of rates or direction of bonds. It's more the lack of bond volatility that the stock market really likes. The stock market hates when the bond market's having a heart attack. And as it turns out, over the last 3 quarters, the U.S. 10-year yield has done nothing. It's been a complete nothing burger. And a funny thing has happened to the stock market there, Willie boy.
Yeah. As if yields, whatever level they're at, if yields are stable, stocks can do well. It's when they're not stable, which is what we saw last year. We saw that incredible surge, all across the curve, and corporate yields. That was really the headache. The risk is, if the Fed is serious about continuing to tighten, if the rest of the global central banks are serious about continuing to tighten, then there's still a path higher for yields, and that could become more of a headache for stocks, a better alternative for investors perhaps going forward than they've had in recent years.
Is that what the 2 years telling us? Is that why the 2 years have been acting so strong?
Yeah. Oh, the 2-year yield.
Yeah, I mean, that's a heck of a bounce in twos.
Yeah, that is the bond market realizing that the Fed isn't going to pivot, that the bond market is having to pivot. And the 2-year yield has pivoted about 4 times since, the end of last year. It was it didn't believe the Fed, it did believe the Fed, it didn't believe the Fed. Like, it was back and forth. The Feds kept raising, and now 2-year yields are catching up to that persistence.
Are those pivots or just a very confused market?
It's the uncertainty. There's a lot of uncertainty, Willie. As opposed to what? All those times in history where there's so much certainty, you morons. Let me finish. Last question before the fun police kicks you out.
Oh, I got a question too. Don't forget me. Don't sleep on me. I'm known to just steal all the questions when we have guests. I guilty as charged again. Sorry, Sean. Last one from me. The bond market and tech, you look at TLT or something like that, bond market and tech stocks, we're really moving tick for tick. The tech stocks were essentially an extension of the bond market. When bonds were getting killed last year, tech was too. As soon as bonds stopped going down, so did tech, right? Like, there was,
there was that quarter. And then more recently, we've seen growth absolutely explode, technology exploding, outperforming value, and bonds are nowhere to be found, Willie.
Yeah. That's,
Thoughts?
I think we can see, I think we need to recognize that some of these relationships ebb and flow over time. Last year, there was a really tight correlation between tech and bonds, and this year, not so much. I think that's one of the challenges to what we need to do is realize and adapt to those changing environments. And some relationships matter more than others at different times. I guess that's the takeaway. The moment you get locked into, well, this relationship has to persist, that's usually when the relationship changes and you get caught flat-footed. So I think looking at a broader array of evidence helps knowing, when to see a turn, when to not get caught up in a head fake.
Sean?
All right, Willie, real quick. So for those who don't know, Willie comes to us from the beautiful sunny shores of Lake Michigan, Milwaukee, Wisconsin, one of my favorite places. I used to live in Chicago. So real quick, July 4th
By
is
the
coming
way, for those who don't know, it's west of New Jersey.
Yes.
I didn't know that.
Before you get to California.
There's no such thing.
You fly over it on your way between the coasts.
Yeah.
Right.
Hey, don't sleep on Milwaukee. Great town. So listen, July 4th is coming up. Pairs trade. Portillo's hot dog, Sheboygan brat. What are you long? What are you short?
It's definitely brats. This is it's brat season all summer in Milwaukee. So you got to go with the brats all day long.
I was hoping you'd say that. I'm long Sheboygan brats all the way.
Oh yeah.
Let's take
What
a little
about
bit.
the Kenosha Kickers? You guys see the Kenosha Kickers? Poker King of the Midwest.
Hey, that Portillo's chart's not awful. Anyway, Willie Delwich, founder of High Mountain Research, links to his Twitter, his site are in the description. Willie, thanks a lot, man.
Thanks a lot, guys.
Thanks, Willie. Come back soon.
All right, you know what that time it is. It's the time of day where we talk to Kimmy Sokoloff, finds out what she's trading today, what she traded yesterday, and we do our best, by the way, to alert you, the people watching this show, to Kimmy's trades. But obviously, the faster way to be alerted is to be in her room. Let's find out what she's trading today right now and talk to Kimmy Sokoloff from Day Trader Pro. Where's my bumper? There it is.
Kimmy.
Hey guys, Sean.
What's up,
What's up?
Kimmy?
Hi, Sean.
Nice PayPal trade yesterday, Kimmy.
What'd you say? I didn't hear you.
Nice PayPal trade.
Yeah. Oh my gosh, it was a tough sledding yesterday. I was like getting stopped out, and then like 11:45, I had like 4 trades. I was like, I don't know what the heck happened. That doesn't typically, and it kind of made up for the day. And I traded too much yesterday. It was a lot. I don't normally trade that many stocks. It was a little lot.
I mean, look at this. You bought PayPal, shorted Snow, shorted Tesla, bought Target, bought Space, bought Mara, bought UNH, and then had a few losses in Coin, Zoom. I'm looking at this Zoom.
And then Coin went. They all went after.
And then they all went after. Yeah, but you got it in the Mara. So, by the way, I'm in the Mara and in the PayPal. I
still like them. I mean, they're great. Just, you got to be careful. Listen, they're Bitcoin, whatever. I just, I'm not about to fall in love with these names, that's just me personally.
They're just letters. They're just letters to Kimmy.
They're her friends. They're her friends, right?
They're
Kimmy,
friends, yeah.
These are my
And,
friends.
I had in my morning note to, idea to short Tesla, and it was trading at like 278. I should have shorted it pre-market, and I did not. It's very hard to get the room and say, hey, it's very hard to make a recommendation pre-market. I have done it, but, I wanted to short it down. I was hoping we'd get one more push towards 280, but we'll see. I got to see how it goes. We're getting at an inflection point where not as many charts are looking great, whereas you have day after day. I feel like I'm pulling teeth a little bit right now.
You're short, you're looking to short Tesla this morning still?
I have to see the way it trades. I kind of missed that gap up. I should have shorted it pre-market, but then I don't know how many people in the room would have seen the trade, so sometimes I feel like that's not fair, right? They would have to look and see rangefinder, see if I did short something, which I have in the morning, of course.
Well, shout out to Jason Wolcott talking about how he made some money in Coin, ZM, and Mara yesterday. So shout out to Jason.
Great job, Jason.
So for those of you people wondering, like, why is Kimmy shorting Tesla? This thing is ripping. For the same reason she was shorting Nvidia a couple of weeks ago when it was ripping. So it's a short-term fade on gap ups. It's not like she's standing in front of a freight train. It's not like she's trying to take short every top. That's not what this is. These are intraday trades. And Kimmy does a heck of a job of fading some of these aggressive moves to the upside. So kudos to you. Let me ask you on Tesla specifically, because I'm really interested in this trade. What are you looking for to trigger the entry? Are you looking to just short it against the highs from yesterday?
Now, well, I was looking for it to stay up. Pre-market was around 278, right? So I really want it. A return's the size of a buck.
He's right.
Sorry.
He's right.
Yep, my accountant has a lot of work to do, Joseph. What's that called? Anyway.
Tesla against the highs yesterday.
I was looking for it to stay up towards 278, okay? And then push towards 280. Now I have to see the way it acts, right? So it's different trade now, right? Someone could have came in and saw my morning note and shorted Tesla this morning down to the gap at 274.75, and they could have covered already and made roughly $4 in it already. Sometimes, me make a recommendation pre-market. Trading pre-market is hard. It's always not fair. It's more illiquid, so sometimes I'm like, I'll stay away from that just for the people, in the room, but I probably should have taken it anyway.
And what about the overall market? What are you thinking here? Just generally speaking, SPYs, Qs, where's your head?
I think we're extended, but that doesn't mean we can't stay extended. I'm sorry, dropping back down to the 420, 400 level in the SPYs to me is no big deal, but to other people it might be.
All right, guys, I just dropped a link in the chat. There's also the QR code up on the screen. That will get you into Kimmy's room. She live trades the open every single day. She announces her trades. And as we've just discussed, a lot of them are pretty good. So check it out.
Thank you.
Kimmy, good luck as always. And we'll talk to you again later.
See you later.
All right.
Bye, guys.
Go get him, Kimmy. Go get him. I like that Spencer wishes her good luck. Like luck has anything to do with it.
I
Don't
like
get JC started on
luck.
You're in for a long tirade.
I like wishing people good luck. Good luck with whatever it is you're doing today.
Luck is the excuse that losers give for sucking.
Good luck at your life today. How about that? Hey, it's 9:24. Let's do some earnings here. We got a couple that I want to discuss. Let's talk about FedEx, and let's talk about this is actually interesting. Winnebago. No one's buying Winnebagos, but anyway, let's do some earnings right now. We'll start with FedEx. Okay, so we were talking earlier about what stock was it? The cruise liners, right? Are these indicators for the economy, right? Obviously not, right? But FedEx actually is a decent bellwether for the overall economy, of course, because the business they're in. And the report was mostly okay. The top line missed, but the bottom line beat. Let's bring the calendar up on the screen so you can see.
Throw up the chart. It's slide 1 on the deck.
Right. So there's a calendar. You can see not much this week. Obviously, we're at the end of earnings season. But let's go to that FedEx chart now. So again, miss on the sales, beat on the bottom line earnings per share. I think the stock is down this morning a little bit. But let's get your guys
down 7 points, down 3% on the day. This is what I'm looking at. That's that former support, end of 2020, early 2021, support again in 21. That turned into resistance last year, turned into resistance again a couple months ago, and now we're back to the scene of the crime. 235 for me, that's the level. We're below that. There's nothing really to talk about. Not only is this one an important one for the economy, so they say, but it's also a component of the industrial stocks, which is a very important sector for the overall market. It's also a component of the Dow Jones Transportation Average. So this one has meaning. I don't know anything about the economy. The less I know, the better. It seems to be more of a distraction than anything else for investors. So for me, I'm more interested in what role it plays in the market itself. And to me, that's the role that it plays. It's an industrial, a key industrial, and it's in the Dow Jones Transportation Average. Big name.
And then the other one I wanted to hit was Winnebago, just because this is remarkable here. So I can give you the numbers.
What's the ticker symbol?
WGO. Just listen to this, okay? Net income, earnings per share beat, sales missed, whatever. I don't care about that. What I care about is the year-over-year numbers, okay? Net income for the quarter, $59 million. A year ago, it was $117 million. Their revenue fell 38% year over year. I guess no one is buying Winnebago. I guess everybody who won one bought one, and now no one is buying Winnebagos apparently.
Winnebagos are like those, like the house on wheels that you go and take to trips like to the desert and stuff.
Yeah, Sean should know all about that.
You have a Winnebago, Sean?
No, but I have Winnebago envy. I've always wanted to do a road trip around North America in a Winnebago.
Where do you put it? Do you need like a storage unit to like stick your Winnebago? Like, what does one do with a Winnebago when one is not driving into the desert with it?
Well, it kind of depends on where you live, I guess. Out here in Colorado, where I live, where people have a lot of land, they just leave it in their backyard.
Nice.
I can't imagine. Imagine me telling my wife, "Hey, honey, I'm gonna go stick this giant truck in our backyard." Are you kidding me? Like, how does that conversation go?
I've always dreamed, JC, of doing a stock trading, technical analysis roadshow where we go around the country in a Winnebago. We meet traders. We all trade on from our laptops from the road. I think it can make for some really great content, some really good, interesting things we can learn along the way. Throw that in your back pocket.
Sean thinks he's John Madden now all of a sudden.
That's right. Dude, John Madden had it right. You guys all laugh, but he had it right.
Should we, before the market opens, you want to tell the folks a little bit about Asia there, Spencer? I know you wanted to bring it up.
Yeah. Speaking of traveling around the country, Sean is traveling around several countries, actually.
7 countries.
7. You want to say several? 7 countries in Asia coming up. You're leaving July 4th. That's like 2 weeks away, right?
We land in Singapore on July 6th.
Okay. And then you're going on a 7-country whirlwind trading.
8 countries.
Sorry,
8 cities, 7 countries.
Okay, 8 cities.
What country are you going to? 2 cities.
So the first leg of the trip is Singapore and Kuala Lumpur. Both
those are 2 different countries, bro.
Are they?
Are you serious?
Oh man, I don't know. I don't know.
Are you kidding me? What's the matter with you, bro?
I'm not kidding you.
I mean, they're right next to each other, but yeah, they're 2 different countries.
These are the wonderful things we're going to learn.
It's night and day.
Wait,
Singapore's like
one of those is one of those Malaysia, and one of those is
yes, Kuala Lumpur's in Malaysia.
Okay.
Guys, like, did you skip geography class? Yes. Kuala Lumpur is next to Singapore. Singapore is like Miami without the Cubans and the Jews and more Asians, right? But like it's hot and humid, and it's nice and clean. Right? Just the people are different, right? And you can't chew gum, right? Yeah. Apparently. So I didn't know that. I don't chew gum anyway, so it wasn't an issue. Singapore is really cool. Also, the Kuala Lumpur is very cool for completely different reasons. But yes, it's 2 different countries, Sean. Come on.
My bad. Well, listen up. People from around the world, if you're watching this show, we want to hang out with you. We want to get you on camera. We want to talk about your journey. We want to learn about how you approach risk. So if you're in Kuala Lumpur, Singapore, Bangkok, Manila, Taiwan, Hong Kong, Tokyo, Ho Chi Minh City, if you're in any one of those places, reach out to us. What's that? Taipei. That's in Taiwan, right? Yeah. So reach out to us.
I don't know if you heard Taiwan's not part of China. It's not.
I knew that. Country. Thank you. I knew that.
They have semiconductors there.
Hey, Sean, make sure when you're in Taipei to go to the Grand Hotel. It's my old stomping grounds, all right?
They have great speakeasies.
I'll drop your name, Spencer. I hope that gets me a free drink.
There's a lot of New Yorkers in Taipei. A lot of New Yorkers that are just opening up speakeasy bars in Taipei. Great cocktails.
Anyway,
I know you don't drink much, Sean, but you're going to need to drink in Taiwan.
If you live in this part of the world, shoot Sean a message on Twitter, and we would love to, because we're doing a documentary. I should mention the whole point of this is we're doing a documentary. That's the point, okay? So Sean and Straza, we're sending them off to find traders and talk to them about how they do it. So if you're in
We
that
should
part
play the trailer. You probably don't have the trailer handy. If you do, play it. If not, we'll play it tomorrow. Have it ready for tomorrow so we can show the folks.
I'll get the trailer.
The trailer's great. I got great feedback from the trailer. People like the trailer.
Yep. Let me make a note right now.
If you're in any of these cities, Singapore, Kuala Lumpur, Hong Kong, Taipei, Manila, Tokyo, Ho Chi Minh, or Bangkok, give us an email. Come hang out with the folks. We're actually going to be going with the CMT Association, partnering up with Bloomberg. Also, shout out to Centerpoint Securities, which is my favorite brokerage account that I have. We'll be talking much more to you guys about Centerpoint Securities. Shout out Centerpoint, our good friends over there. Great platform. Great platform.
Nikki wants to know if we do meetups in Jersey. Well, Nikki, I'm in Jersey. The problem is no one else. All these clowns are not in Jersey. They don't know what they're doing. But maybe one day we'll have a meetup in Jersey. Okay, it is 9:32. Markets are open, everyone. If you didn't know that by now, I don't know what you're doing. Let's take a look at, did we have anything from the hot corner, Alfonso? I see it up right there. Anything of note?
Throw it up.
He says we did. All right.
Yeah,
let's talk about it.
Hot corner. So hot right now.
What's the good word here on the hot corner? If you don't know what this is, it is a daily note that goes out tracking all the biggest transactions from Washington to Wall Street. This is the quote unquote smart money, right? Let's see what we got here.
Do I have that number right? How much did he buy of that biotech?
$100 million?
Is that number right? Can you guys double check that?
$107 million.
Is that number right?
That's a chunk of change. Oh, here's the Form 4. Thanks, Fonz.
Look at Fonz. Absolutely
Man.
incredible.
Wait, I have to make this bigger. Hold on, so I can see. All right, what do we got here? Yeah.
$100 million transaction?
Well, it's still too small for me. What does that say? 4.7 million shares? I can't really read it. Yeah, 4.7 million shares at 22 whatever. Yeah.
Dude, that's a lot of money. Why are you guys laughing? It's $100 million.
That yes, it is.
All right, what's the ticker symbol?
Here, I'm trying to make my screen bigger because I can't. I'm blind. ZNTL.
So ZNTL.
This
is a $1.8 billion biotech from Midtown Manhattan. So it's less shady than maybe some other ones. ZNTL, $100 million. And who are they? Matrix Capital Management? I mean, dude, $100 million. Am I the only one who thinks that's a big deal?
No, that's a big deal. And it begs the question, what do they know? Right?
Jesus. They're not doing that because they think the stock goes down. Man, listen, that really stands out to me. Below 32, it's a little messy. We're right there. You know, this name looks a lot like so many stocks that we've been seeing, particularly in growth and technology and other areas, that base building since the first half of last year. This is just another good example of that. Man, a breakout of 32. These guys very aggressive with that buy. Wow.
Yeah, that is the only other transaction like this I can think of is the founder CEO of Asana, who's bought a ridiculous amount of his stock in the last year and a half, 2 years. But yeah, that's a large buy. Holy cow. Anyway, was there other
I couldn't even read. It seemed like almost like it was like 100,000, right? Like, is that number right? Is the decimal point in the right? $100 million. Jeez Louise.
All right. What else? What else did we have in this morning's edition of the Hot Corner? We had Disc Medicine. Nice ticker there. Iron. I like it.
They filed a 13D. Access Industries Management LLC. How much did they buy? I don't think it was much.
Yeah, I have it. Get the table open.
Throw the table up. How much did they buy? Didn't seem like much. Seems like it's come a long way to get to 55.
We have it was a
It's $1 billion biotech out of Massachusetts. There you go. The original filing 15%. So they're buying a ton of this stuff. Yep. So this is IRON. So it's a $1 billion biotech. So interesting action out of the biotechs. A lot of purchases. Really interesting. All right. I see you. I see you guys. All right.
Oh, and Strauss is noting that the short interest on ZNTL is 30%. Woo! Talk about competing signals. Holy moly. All right.
That's not competing signal. That's a good thing.
Well, we talked about how stocks that have a high short float have a high short float for a reason, right?
Well, this guy buying $100 million worth of it clearly thinks the opposite.
I know. Competing. That's what I'm saying.
That guy. I like that guy.
All right. We are in the middle of redesigning our Hot Corner landing page, but for the meantime, if you do want to get the Hot Corner, I mentioned that it's a free daily note, goes to your email every single day, covering all the biggest moves from investors, from the boardroom to Washington to Wall Street. This is what you should do. Email us, okay? Email us. I'll put the email up on the screen. I'll put it in the chat, and just put Hot Corner in the subject so I know what the heck you're talking about. And here's the email. It's questions@stockmarketmedia.com. Just put Hot Corner in there so I know what the deal is, and I will add you to the list. It is free. It goes out every single day the market's open, and it's how you know about $100 million transactions. I had no idea until we talked about this just now.
Yeah, it's a good one. It's a good one.
All right. What else did we have here? I wanted to talk about the flow, the follow the flow report. Do we have that? Because we have Sean here, so I figure why not?
I like it.
Where's the follow the flow? There it is. All right, Sean. No, I know normally you and Strauss do this, but this morning you're going to do this.
Well, not only do Strauss and I usually do this, but also when Strauss and I do it, I'm seeing it for the first time, and so just like that, I'm seeing this now for the first time. So let me look through it and see if anything pops out.
We have
interesting action out of the DraftKings, right? You got some semiconductors. McLaughlin coming up again.
I feel like or at least for the last 3 years, DraftKings pops up on our radars every summer, and it's kind of like, is this a getting ready for the NFL type trade? Or are people, being bullish on the NFL via DraftKings? Like, I don't know. I just feel like it pops up on our radars every summer.
You sound like such an American.
I know.
Like you see DraftKings up, you just assume it's because of football.
There is no seasonality in DraftKings. That would be preposterous.
Why don't you explain to the folks what this is exactly, right? For those who are unaware of the follow the flow.
So, all right. So the follow the flow report that Straza puts out every week is we are finding unusual options activity. So whether they're large buys, whether they're large sells, if the transactions are taking place in call options, if they're taking place in put options. And there are some people, I don't count myself as one of them, but there are some people out there who see these trades and they use that trade as information to put on or information that perhaps there's an aggressive speculator active in the market, and that could be a catalyst to move a stock. The way I use it, and I don't want to speak for Straza, but I think he uses it this way as well, is we use this report that first it uncovers that there's unusual activity, so that's great. There's someone who's aggressively speculating or hedging. But we take that information and say, okay, let's lead us down the rabbit hole of, let's look into the technicals. What do the technicals say? Do the charts line up with what we're seeing in this unusual activity? If the charts line up with the unusual activity, that is a clue to us that, hey, maybe there's something to do here. And then we will start digging in and crafting a trade, usually not the same trade that's going on that caught our attention in the first place. We'll do it differently. We'll do it our own way. But really, this is just kind of like a first alert system to let us know, hey, there could be something afoot here. Let's do some further investigating.
And so let's investigate. So this DraftKings, is a name that continues to come up. It's a name that Straza owns as well. I'm not in this name. But it looks like so many other names, like this big base. You got the chart there, Fonz. Throw it up. Just a big base going back to the first half of last year. DraftKings above. I mean, man, originally I was looking at that 21, 22. You can even tighten these stops, against yesterday's lows. I mean, there's opportunities here, man. This name looks a lot like some of these others.
Yeah, if you're a short-term trader, DraftKings right now, I mean, it looks like a great opportunity. You can lean against yesterday's low as a stop. Maybe around $24 a share, and I feel like this thing can make another run back at the highs from a couple weeks ago, back up to 27. Again, if you're a short-term trader, that you love these types of trades, right? You risk 75 cents and potentially make $4 or $3. Those you'll take those trades all day long. I like that, but from a swing trader's perspective, which is kind of the avenue that I travel along as an options trader, I feel like I missed it. I would have preferred to have gotten in when it was trading around 22. I'd like to see this consolidation work itself out a little bit. And if it gets back above 26, I could be interested to take a long trade at that point.
Want to just run in and do the chart report? Keep the party going?
I was thinking the same thing myself. Just brought it up.
Love the bumper tunes.
I like it too. Throw up Ryan Dietrich. Zoom in on there nicely on that one there, Spencer. Ryan Dietrich talking about how when the S&P 500 makes new 52-week highs after a 52-week low, it has been higher a year later, 14 out of 14 times, up almost 16%, and that just triggered last week. Interesting there, a little stat line from Ryan Dietrich. Ryan Dietrich has been dead on lately, folks. By the way, when's Ryan coming on the show? Isn't he coming on soon?
He's on vacation right now, I think. But hopefully next week.
Vacation. Good for him.
Everyone's on vacation now.
I'm just messing. Yeah. Good for him. Ryan Dietrich does great work. Has been pounding the table bullish since the end of last year. Has absolutely been right on the money. We like to take credit around here, but we give credit where it's due as well, don't we, there, Spencer?
Always.
What is the chart report? What is it? What is it? What does it mean to you?
Very simple. We have trained people behind the scenes scouring FinTwit every single day for the best charts, the best insights from the world of financial Twitter. They compile all the best tweets, all the best charts. They put them very nicely into a succinct report. It goes out for free every single day. I'm going to drop the link in the chat, but before I do that, I wanted to highlight this. Where was it? Where was the chart that I wanted to highlight? That was the one from Mike Zaccardi, who also needs to come on this show one of these days. We talked about China yesterday in the context of Alibaba because it was down because of the CEO news. The reason this jumped out to me is it is like a word of warning for a lot of international ETFs, or maybe like country specific international ETFs, is as like the largest weighting goes, so will the rest of the thing go, right? So FXI just had its worst day in 8 months because Baba had a really bad day yesterday, right? And a lot of these international ETFs are very top heavy, right? Either in the top 5 holdings or the top 10 holdings or even the top 2 or 3 holdings, right? So just be aware of that, right? Like you may think, oh, FXI, oh yeah, broad diversification to China. Well, yes, but also if Baba's going to have a shit day, it means FXI is going to have a shit day, and vice versa as well. So just know that. I thought that was a important thing to know. And there was also the bank thing. Thank you, Straza. But my point still stands. A lot of these things are super top heavy. So just be aware of that for any country specific or region specific ETF. Know that going in.
Also, throw up the Day Hagen Asset Management
where was
chart
that?
from Ned Davis Research.
There.
We just had on Ed Clissold from Ned Davis on last week. He is the man. Big fan of Ed Clissold. Go back and watch that clip. He's great. And this one really shows the composite that we use here as well, where we take the seasonal cycle going back for, to 1950. I'm not sure how far they go back in this one. We go back to 1950. They also have the decennial cycle as well as the 4-year presidential cycle, right? And, really showing that everything that we've seen so far this year is perfectly consistent with historical standards. So, people who tell you that this market is strange or weird or unusual, or it's as normal as markets can possibly be. It's literally could not be more normal. In fact, the most abnormal thing I'm seeing is just how normal this market environment is. Like, that's abnormal.
Yep.
Yeah.
All right. I just dropped the link to the chart report in the chat on YouTube. If you are watching on Twitter, you can go to the description, or you can just go to the QR code on the screen, scan it on your phone, get the chart report. Did I mention it's free? It's every day. It's consistent, and it's super awesome. So get the chart report, because
it's just a great way for people who are busy. I don't know about the rest of you, but I got a lot of shit going on.
Yeah.
Right?
Or if you're like someone like me that follows a gajillion people and you miss like 99% of what people post on Twitter, right? Then it cuts through the noise, right? So
yeah, it's really, it takes you 10 seconds. Me, I'm a little OCD, so maybe it takes me a minute or almost a minute, to get through these charts. It's very simple. Scroll down. Some of them I saw throughout the day. Most of them I did not. Patrick does a great job of aggregating this. Nobody does a better job. Chart report. Awesome. Every day, every afternoon. Great to get in the inbox. And if you miss it in the night before, which I often do, checking it out the next morning is also great also.
Yep. Oh, wait. I'm just seeing that. Did Amazon set their Prime Day dates this morning?
Hold on. A quote of the day from the chart report is an excellent one, and one that is relevant for the current market environment. This one coming from Bob Farrell, who I actually met for the first time 2 months ago in New York City, which is very cool. Bob Farrell, shout out Bob Farrell. Says excesses in one direction will lead to an opposite excess in the other direction. So in other words, like John Rogue always says, we're not in a reversion to the mean business, we're in a reversion beyond the mean business. But I have found that is especially true when we're coming off of excesses. So, people who are talking about, oh, the market's overbought, there's too much optimism. Just understand, we're coming off historic oversold conditions, historic short positions, some of the most pessimistic sentiment of all time. So do you think that we're just going to revert to the mean? Or do you think that we're going to go beyond the mean, like John Rogue likes to say, and in this case, Bob Farrell, how excesses in one direction will lead to an opposite excess in the other direction? So great quote. Nice job, Patrick, over the chart report.
Where is the... Oh, there we go. Yeah, thank you, Stock Market Mike. We appreciate that. Great value for the price.
Wait, what's that price?
It's free, stupid.
All right. Let's talk about Tesla here. They caught a downgrade. You don't really see downgrades to Tesla too often. That's why it's notable. Downgrade to neutral today from or equal weight, whatever, same thing. From Barclays. Downgrade.
And the market doesn't care. That's
I know.
It's comedy.
Let's just pull up the Tesla chart though. I do think it's interesting when you, because all the analysts are all overweight and have buy ratings on Apple, Tesla, Amazon. How can you not at this point? So a downgrade is interesting for that reason, because it is a contrarian call. Do we have that Tesla chart? I believe we do.
I don't understand this whole cottage industry of upgrades, downgrades. Listen, if you're an analyst, I only care if you are crazy bullish on the stock or crazy bearish. Everything else, just shut up. It's noise.
All right.
This is what it looks like to me. In my experience, ladies and gentlemen, there's a lot of technical analysis books and blogs and all that stuff. And as great as they are, and I've read most of them, a lot of them put a lot of emphasis on mean reversion and reversal patterns and things like that. And while head and shoulders top and rounding tops and all of these things do exist, we do see them. They're actually very, very rare. Why? Because asset prices trend. So the fact that people are constantly looking for tops and bottoms, for that matter, they're defeating the entire purpose of what we're trying to do here in the first place, which is identify market trends and take advantage of them. So in this case, you can argue that this is one of those tops. The short interest certainly pointed to that. All of the pessimism in the name certainly pointed to that. A lot of times you get that failed breakdown. This looks a lot like, look at the S&P 500 in the summer of 2010. You know what it looks like? It looks exactly like this. And you got that whipsaw and then off to the races. And then what ends up happening is that not only do these stocks or indexes or ETFs get back to those former highs, considering it wasn't a top after all, but they tend to exceed those highs. And these turn out to be just little blips within ongoing, very strong bull market. So I wouldn't be surprised at all to see Tesla trading at $500-$600 a share later this year or next year. And you guys know me. I'm not one to throw out outlandish targets and be like, oh, Tesla's going to double, just add $1 trillion in market cap, no big deal. So I'm normally not that guy. You know me. But I'm telling you, in my experience, when these patterns appear, those tend to be the implications. So yeah, we're talking to Tesla in the 500, 600s. Yeah, later this year or next year for sure.
Well, my 9-year-old son will be very happy. Just to the left of that green arrow in the low in May there, my son bought 1 share of Tesla. He's crushing it right now.
The next Warren Buffett. Hello. Can we go to recess?
No, let's do some
No.
questions from the chat first. We had a question earlier about Schrodinger, however you say that. SDGR. I think we talked about this yesterday on Chart Request Live. That's why I'm bringing it up here. Software company, right? Yeah.
$3 billion. It's a healthcare stock. It's healthcare information services.
Oh, yeah. Well, it's a healthcare software.
Okay. Right. It's a healthcare software, right? But it's in the healthcare space. Looks like software, to your point.
Right.
48's a big level there. As you can see, that's that former support from 2020, right? So that's trouble. Came a long way quickly. Speaking of things that have this one tripled this year. Tripled. Talk about these cruise lines doubling. That's nothing compared to this guy. This used to be a $1 billion market cap. Now it's a $3 billion market cap. Let's see how it reacts to this 48. Got a ton of momentum. If it's above 48, I don't have a problem with it. From the long side, it's come a long way. So I got to see it.
This is Schrodinger's chart. Is it an uptrend or a downtrend or both at the same time?
This is a bearish to bullish reversal pattern to me.
Schrodinger's chart.
Thoughts
on, let's do 1 or 2 more here from the chat. Thoughts on Rivian from Terrence. He wants to know whether you should buy above $16 in Rivian.
Well, I can give you an anecdotal note on Rivian, and that is, I don't know what it's like where you guys live.
Wait,
but
you saw one?
Dude, they are all over. They are all over here in Boulder, Colorado, where I live. I'm seeing them every day. They're popular here.
So didn't they just? I'm not like a news guy, but I hear things. I hear things. Didn't they just do a deal where they could use the Tesla fueling stations or something?
No, that's not Rivian.
No, that was the other one. There's some one. The other EV maker. I thought. Here, maybe no. It was actually. I think you're both right.
The big news was that Ford and GM are now partnering with Tesla so that their EV cars are going to be able to use the Tesla charging network.
Yeah, but there was also a Rivian thing. Sean's right, but actually you're both right. So Rivian owners are going to be able to have access to that network as well, beginning next year.
Can you throw up the chart quick?
Yep.
Not that one.
Not that one. Sorry.
It should be slide 1. Slide 1 there, Rivian.
Right,
nice base. Throughout the year. Somebody pointed out that 16 level. Kudos to you who pointed out that 16 level. Yeah, that's exactly right. Terrence pointed out that 16 level. Yeah, if we can start holding above 16, I'm with you on that. I got to see it, right? I mean, this thing's a real piece of shit. So just understand the animal that this is. I mean, this is as much a hot garbage as you're going to find. So, below 16, you can't touch it.
Are you guys not seeing these trucks driving around your neighborhoods?
No, there's no Rivians where I live.
I saw one and I pointed it to my wife and, it kind of like, not interested.
I think I have like 3 neighbors that have them. I mean, they're everywhere around here, guys.
I'm surprised you even have 3 neighbors living up where you live. All right, let's do some recess here. It's the end of the show.
All right, we're going to talk about Hong Kong, right? And Sean, you're going to go to a place called Tim Ho Wan. Tim Ho Wan is the cheapest Michelin star restaurant in the world. And it is in Hong Kong. And it is delicious. And you're going to love it. And you're going to pay like $5 for like a Michelin star meal.
I love it. Sounds great.
And then you're going to take the money that you saved at this restaurant and you're going to go spend it in Lang Kwai Fong, which is like the West Village of Hong Kong. And I got to tell you, they can party. They can party. But there's like an element of communism there that is very strange. So I grew up, in Miami, partying in South Beach. I lived in New York for a long time. So I've been to an establishment or two where, there are bottles and people dancing and these sorts of places. And what you're going to find in Hong Kong is that it's going to be midnight, 12:30. Place is going to be raging. Everyone's having a good time. And then all of a sudden, they turn on all the lights and like 20 police officers come in and start searching everybody. And they start taking some random people out. And like everybody's like serious, but everyone's drunk. So they're kind of giggling. And then all of a sudden, like 10 minutes later, they turn off the lights, the music starts bumping, and it's like nothing happened. Wow. It's very odd. But yeah. And then, my understanding is that there's a lot of money under the table. So if you're not paying the police, they're just going to keep coming throughout the night and ruin the party. So you got to pay them off to stay away. So there's a little bit element of that. So kind of like an interesting dynamic that you'll see in Hong Kong that you're never going to see in Miami or New York.
All right.
Okay, I'll be ready.
Good to know. My recess is this weekend. I'm flying out to Minneapolis for a wedding. I've never been to Minnesota before. If you have any recommendations for me about things to do, restaurants to go to while I'm there in Minneapolis, just hit me up in the chat or on Twitter. I do intend to try a Juicy Lucy. That's the one thing I know I'm going to have for sure.
What is that?
It's a Minneapolis staple. Apparently, it's like 2 burger patties. And they put cheese in the middle, then they seal the sides, right? And then they cook it. So when you bite into it, like all the cheese that comes out, right? You know what I mean? It's a Minnesota thing, man. I don't know. So any other recommendations for Minneapolis? I saw it on Man vs. Food once a long time ago. Let me know. I'm going there for the first time. The state of the lakes or whatever it's called. Okay, Sean, what do you got?
I just want to reiterate what we talked about a little bit earlier about this Asia trip. For people who live in any of those cities that we mentioned, we'd love to hang out with you. We'd love to hear your story. Love to have a drink, go for a walk, go for a hike, whatever works. The whole point is for us to discover the Asian trader mindset. So the more of you that we could meet and talk with, and we'd love to have you on camera if you're cool with that. If not, that's cool too. No worries. But reach out to us. Hit me on Twitter. Shoot me an email, sean@allstarcharts.com. We want to talk to you.
All right, let's get the schedule up on the screen here on Stock Market TV. It is. I'm all thrown off by the day of the week because Monday we were off, but today is Wednesday, so we got What the Fick with Ian Cully and myself at 11:30. I hope we're doing the hot corner today at 1:00. The Flow Show options trade of the week. We got a lot going on today on the channel. So stay tuned for that. There it is. Look at that. Big day. Wednesday is kind of like our big day here on Stock Market TV for shows. I want to thank Sean McLaughlin for jumping in to the gauntlet at the last second to step in. We appreciate that. Sean, thanks to Willie Delwich. Thanks to Kimmy Sokoloff. Thanks to all of you in the chat. Any questions, comments, concerns, feedback, good, bad, otherwise, email us. Questions at stockmarketmedia.com. Tweet at us. DM us. We usually respond to such things. And that's our show. Any final thoughts, anyone?
Let's go make some money.
Let's go make some money. You heard it here first.
When you're in Taiwan, you're also going to go to Ding Tai Fung. Shout out to Bean Cruz, Ding Tai Fung. These dumplings are ridiculous. And you got like 100 people making these dumplings like a machine. It's sick. It's awesome. You're going to love it.
All right.
Spencer's rolling his eyes.
And on that note,
wrap it up.
He's jealous.
Raise it, John. Run it. I can't take no loss. I don't even know what it costs.